We on? All right, excellent. How's everyone doing? We may take a long time and keep you from lunch, unless you show me some energy. Everyone having a good day? Excellent. Okay, so I had an opening line for this, but Fred just scared the living crap out of me. So let's talk about this, Zach and Alex. He just described an industry that has 16x worse business operating environment over a five-year period. Let's just start with that. Why is this still an attractive industry?
You know, it comes down to being good at it, is what it is. It's about staying ahead of that curve. The curve is actually, if you think about it, what do you want in a business? You want something that is not only profitable, but to a certain degree, on a long-term basis, you want some minimal barrier to entry to new participants so that your market share can stay the same. And so we've really approached that, and we've taken it from an efficiency point of view. And what I mean by efficiency is the amount of Bitcoin produced per, kilowatt or megawatt, actually used. And if you can stay on the leading edge of that curve and be highly cost effective first there, and then second, highly cost effective in how you raise and use capital, which is what we're going to talk about with building in a bear market, and it's allowed great opportunities to exist, then it's a great place to be, because if you don't understand all aspects of this business, it can be very challenging. But if you're an expert in the business, it can be a great place to operate.
And we'll talk about the opportunities that I know you think are going to be coming up over the next quarter or two for consolidation. Alex, you cover these. You manage an index, I think one of the largest indexes that trades these stocks. The title of this panel is Building in the Bear Market, but these stocks are up 2-3x this year. Some of the best performing small cap stocks, period. Why are we still in a bear market?
If you look 2023 in isolation, yes, shares are doing exceptionally well, 100%, 200%, and looks very good. But then if you go back to the peak of the previous bull market, these shares are still down about 10x, some of them. So there's a long way to go. And as Zach said, I think the best placed players in this space have a lot to win when you have price reactions like you have had now. Just wanted to add what Zach said. The reason why this industry is still attractive is also because it's the only way to buy Bitcoin below cost, right? The best ones are still producing Bitcoin at $18,000 a Bitcoin, whilst this is going for 34 now today. I think that's why it still remains a very attractive industry.
I want to get to later what you think the impact of an ETF would be. But before, just quickly, does anyone know what today is? It's a very special day. It's an anniversary of something very important. Does anyone know? White paper, October 31st, 2008, 15 years to the day, the Satoshi white paper. Excellent, you get free lunch. Okay, so Zach, what makes for a great and compelling investment as a Bitcoin miner? So I know you believe scale is extremely important. So talk to me a bit about how you've achieved that.
So I'm going to first start with what Alex just said, and which was, Bitcoin mining is the only place you can get a truly leveraged play on Bitcoin on a real-time basis, right? It's the only place to go buy through our own work product or proof of work, Bitcoin at lower than cost. So if we start there, there's
scale.
Yeah, scale. Sorry,
yeah.
Wanted to get to that. So from a scale point of view, that's really what we've been focusing and building on. So again, being a leverage play. So our main cost is power, but we're also public companies. We have a lot of costs that go along with that. And how we've actually looked at measuring it, we as a company are on a precipice of a big jump. Going into the first part of next year, we will move from 10 exahash to 16 exahash of processing power almost overnight. And that equivalent value of spreading our overhead across an additional 6 exahash is actually the same as adding a discount to our power to reduce all of our power, almost 2 cents. And so when you think of that, and somebody now they have a smaller scale, they have similar overhead because they're also public, they have to go find cheaper power than a company like us would have to have. And so, positioning as we go into halving is incredibly important. The capital markets, I believe are going to move to quality. Right now, it's been highly speculative. Markets have reacted to headlines. And I think that markets are taking a shift where they're now reacting to actual bottom line. And I think that in order to do so, scale is going to be one of the main differentiating factors. And it's not something that you can produce overnight. It takes years to develop scale. And that's why I think, again, I'm going to point to positioning is something that can't be reclaimed. And I think it's incredibly important going into the upcoming halving.
Yeah, so Alex, the equity and debt markets have not been particularly friendly to miners looking to scale, right? It hasn't been easy to borrow. Talk to us about why that is and why that might change.
I think miners had a very narrow window of access to debt markets, really, which lasted between mid-2020 and early 2022. And then, obviously, the bear market has not been very friendly because terms were not very attractive to lenders. But I do think that equity markets have actually been a lot more forgiving than elsewhere because companies, especially the ones who are listed in the Nasdaq, have been able to draw significant funds to build their operations there. You're talking about hundreds of millions where they can buy machines with, and so you don't need to access the debt markets so much. This does come with shareholder dilution, but I think you need to, in this space, you need to balance out the risk between a company holding more debt in their balance sheet and another one who has a stronger balance sheet but also dilutes you. One has a discount because it might go, it's over leveraged, or it might go bust by any measure, and the other might not be as attractive because of the dilution. But I think depending on where you are in the cycle, one can be more attractive than the other.
You have to find lenders who are willing to accept Bitcoin or ASICs as collateral, right? So you need lenders that either are comfortable holding Bitcoin as collateral, or a lender, we talked about this before, Zach, that theoretically is comfortable kind of taking the keys over and walking in. And I imagine those are somewhat difficult to find.
Yeah, debt markets, we've taken a very conservative approach because, again, it's either very high risk, so you pay a risk premium for if they're just lending on machines. That involves a lender that has to come in, take something back, and find a new home for it to either plug in or sell. On the flip side, you could leverage your Bitcoin, which puts you at risk of a margin call. And to your point, something I think that really needs to happen is lenders to get sophisticated enough that they can provide lower interest rates because they understand the risk very well, but they would be willing to come in and basically take the keys. I think that that's something that is what the industry actually needs, because the cost of capital is so prohibitive that debt is largely to be avoided in this case because of the volatile nature and the ability to make sure you can always meet your obligations. So I think that really what we need innovation in how debt works. We need the ability to really build on top of it, and that doesn't come without education and long-term trust.
I think I'll just pat ourselves in the back. I think Coinbase did we're the largest debt deal in the space, right? But we did it because we're comfortable holding that Bitcoin as collateral, we're comfortable with our ability to hedge it. So we can talk. And I know, look, we timed that trade right. So we did it, I think Bitcoin's up about 60% since we did that deal. So I think from our risk perspective, it looks good for us. So hopefully more people will dive in. There's been a trend recently of Bitcoin miners announcing AI deals. How do you feel about that?
To be blunt, I think a lot of it is a little bit of window dressing. I think that we've stayed highly focused, and being an expert at something, it matters. And I think again, retail trading reacts to headlines, and we are one of the very few operators in the space that has run a traditional data center, and it involves a different staff. Running a Bitcoin mine data center is industrial. It doesn't involve internal cooling. You're largely using air cooled, or you're using some of the immersion technology. But, you don't have to have the same amount of network engineers and software engineers. You don't have a customer that's on the other side that if the system goes down, his business goes down, or they lose data, or things like this. Having been on both sides of that and knowing what it really takes, Bitcoin mining is actually a more profitable and less labor-intensive business. And because it does take so much capital, we think our capital is best suited, really focusing on what we're best at. And so I think that there's going to be a large surprise to some of the announcements that have come, because I think it's going to be a lot harder to get into than a lot of people expect.
Yeah. So let's talk a bit about. I know you're good at a couple of things. So you're unique. People like you. The Bitcoin mining community, if you don't know, is somewhat small. It's sort of like it's a little bit Real Housewives-ish. It's a little bit snarky. Everybody has an opinion about everybody else. I know a lot of them, and you're generally well liked. So kudos to you.
Well, I appreciate it.
And I know that it's important to you to maintain a sort of a congenial environment with politicians in states that you operate. So let's talk a bit about the IR, the PR behind being a Bitcoin miner and operating a lot of your, in Georgia, right, for example?
Yes.
Yeah, the state of Georgia, not the country. Yeah. What's that experience like of building a good, positive community partnership?
Yeah, we think it's actually one of the most critical pieces. So one of our mottos is Bitcoin mining for a better world. And I think leading with that and actually believing it and meaning it matters. So we take what we refer to as a front door approach. When we go into communities, it's about sitting down with the community leaders, the local politicians, or even a senator that may control a region, and doing some education before we ever turn a shovel or move some dirt. And it's a hearts and minds approach, because it does matter. There is so much disinformation that is out there about Bitcoin mining, that it increases energy rates, which is untrue, and many other things. Instead, when you go in and the politicians that you're going to work with and the community impact that can actually happen, we're actually now fielding calls from communities to come in, because I'll give you an example. We operate in a small town in rural Georgia, and this is a town that used to have a factory that was shut down. There's only 3,500 citizens, and they'd actually had another miner that was there that had been unable to pay a power bill. And we got a call to come in, and we took care of the old power bills. We actually purchased the facility, and fast forward 2 years, that city has now doubled its city budget. We are meaningful taxpayers. We didn't ask for a discount on our taxes, because that's, again, hearts and minds. And doubling the budget for a town of that size has also allowed them, because they're their own utility, their citizens pay lower power rates. The mayor actually ran on a platform for reducing power in the city. So these are a few small examples where Bitcoin miners can have this real impact of affecting and balancing grids and creating positive economic outlooks. But getting in and talking about it and then delivering is what matters in these communities to actually make it happen. The alternative approach is to come in and not talk, and to build a facility. And then what do you see? You see noise complaints and things like that happen. And that can damage the entire industry. And we really feel that it's important, not only for us, but we see ourselves as protectors of the industry, especially in the state of Georgia. And which is the state of Georgia in the US is where we are largely operated. And to your point, how do we engage with local politicians? It's because of the energy. Energy is regulated in the US largely at the state level. So really protecting that and owning it and working with the government is how we're going to be able to also avoid what we see happen in states like New York, where there's moratoriums and things like that. Again, it's really important to engage to keep a healthy environment where we operate.
It seems particularly important because for some reason, Bitcoin has become such a polarizing issue, bizarrely, in the US to get in front of that narrative, because as we've seen recently with Elizabeth Warren and the sort of incorrect data around terrorism financing and crypto, once that false narrative gets put in place, it's very, very hard to remove, even with facts. It's become like, for some bizarre reason, I'm not sure why, since it's just really math. People don't protest the Pythagorean theorem, but for some reason they get very aggressive about Bitcoin. Alex, let's talk a bit about fund flows and ETFs. Do you think we'll have a US ETF for the next 2 quarters?
Yes. Yes, I do. I think all the evidence is pointing to an approval coming soon, and I think more importantly, the impact of that that's going to have in the industry. It could already have been felt. It was already felt last week, for example. At CoinShares, we track fund flows into Bitcoin ETFs, crypto ETFs and ETPs around Europe, Canada, and other countries. And we had the biggest flows since July last year, right? And yes, this was based on something that was on some unconfirmed news that was then tracked back by Cointelegraph. But nonetheless, shows that there is a lot of appetite there, right? And so once this gets approved, yes, there's a risk that the hype might not be as big as people are expecting, but there's still a lot of latent capital waiting to be deployed to these vehicles in the United States, which as Mike said yesterday, it is the #1 market for this. So that's going to generate all types of virtuous cycles, and because people are going to be pumping money into these ETFs, who are going to have to buy in exchanges, who are going to have to custody that somewhere else. So you have financial services around it, profiting, benefiting, and eventually it will trickle down all the way to the miners and the communities. These guys can grow. So I think an approval in the US would be extremely beneficial to not only people who want to invest in this, but the whole ecosystem in Bitcoin.
Yeah, I think there's. My background's commodities, and I looked back, and there really has never been a single commodity asset ETF where over time there has not been sustained upwards price pressure on that commodity. Just as sort of a natural consequence. I do think people underestimate how long these things take to build up. There's a educational process. The brokers have to get excited about it. They have to learn. They have to educate their clients. So I think we might be disappointed as to the initial fund flows, but patiently, once that BlackRock, Fidelity, Schwab engine starts to build and grow, it is pretty powerful. Zach, let me, last 2 minutes for you. What are some of if there's one or two sort of misperceptions or misconceptions about the mining sector, either from professional analysts or retail, that frustrate you the most, that you could correct, what would they be?
That's a great question. I really think that it comes down to the first and foremost is megawatts don't equal output. Exahash doesn't always equal output. An efficient operator and an efficient use of power is what actually is going to deliver results to the bottom line. And again, if you're not running a facility, which is the exahash side, we have all this processing power. But if you don't have a team that can keep it up, then it's wasted capital. It's dead capital that's sitting there. We've taken the approach that we own and we operate all of our facilities because we're always going to care more about our server than a third party is going to. And our employees are shareholders, so they also care if it's up. And that again comes to heart and culture of what we built. And first and foremost, I think that matters. We're in this to mine Bitcoin. So Bitcoin production, the ultimate output is what matters. And then again, if, right now we have 280 megawatts under our belt right now. We have another 150 coming online in the next 3 months or so. And we are producing more Bitcoin with the same megawatts than several of our peers. And when you look at that, the power price is only one part of that equation. What is the machines behind it? What is the efficiency? Someone could have, one miner could have a lower power price than another, but if their machine uses twice as much power to produce the same Bitcoin, then it's all the same. So again, paying attention to uptime, efficiency, power price, those are the 3 pieces that matter. And I think that too often there's a blanket. There's one piece that's picked up. Oh, the megawatts here, or oh, the power price. that was kind of a lump sum answer, but you have to look at the company as a whole. And I think far too often there's a favorite metric that's picked instead of looking at everything as a whole.
Well, in line with your views on operational efficiency, we're finishing right on time. Thank you so much, Alex. Thank you so much, Zach. Enjoy lunch, everyone.